Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom podcast, episode 60. Today, our guest is Amy Wan. Amy is an attorney who specializes in real estate syndication and crowdfunding for entrepreneurs across the globe. Her mission is to democratize access to legal counsel and capital. Amy is the founder and CEO of BootStrap Legal, which automates the drafting of legal paperwork for real estate private equity, syndication, and crowdfunding deals. Previously, Amy was a partner at Crowdfunding Lawyers and General Counsel at Patch of Land, a real estate debt crowdfunding platform. Amy is also the founder and co-organizer of Legal Hackers LA, which programs around the intersection of law and technology, and was named one of the 10 women to watch in legal technology by the American Bar Association Journal in 2014. Without further ado, let's jump into today's interview. All right, today, welcome on the show, Amy Wan. Amy, thanks for joining us.
Thank you so much for having me.
Absolutely, it's our pleasure. So, Amy, could you tell us a little bit about yourself and how you got started in this industry?
Yeah, sure. So I am a real estate syndication and crowdfunding attorney by training. My family has actually always been in real estate for a long time, but mostly, smaller properties, single family residentials. And basically, after I went to law school actually and worked for the federal government, when I moved back to LA, I was kind of looking for something that was more interesting. And so I found a position as general counsel of real estate crowdfunding platform. It was one of the very few first ones at the time. And we were basically one of the first platforms to use one of the brand new Jobs Act regulations, which allowed us to crowdfund real estate. So what we did was we syndicated fix and flip debt. Ever since then, I joined a boutique real estate syndication law firm as a partner. And now what I'm doing is I am automating part of the process of drafting legal documents for real estate syndication and crowdfunding deals with technology. So we combine attorney services and technologies to basically get people real estate syndication docs faster, cheaper, easier.
Yeah, that's awesome. Anybody that's ever syndicated or raised money for an investment deal knows that legal fees are pretty onerous and they, really impact your bottom line and ultimately lower your ROI that you can pass on to your investors. So yeah, great stuff. Amy, for those people who don't really understand the difference between crowdfunding and syndication, can you kind of walk us through the fundamental differences of those?
Yeah, so crowdfunding and syndication are actually two concepts that get confused a lot. The very short, simple, non-technical explanation is just that syndication is offline and crowdfunding is online. If you really want to dig into the technical definition, syndication is actually a structure. It's the act of pulling investors itself, whereas crowdfunding is more of a method. So if you're syndicating online, that's basically crowdfunding. Crowdfunding is, it involves advertising, it involves marketing, whereas syndication, it's kind of like the overarching thing that you're doing.
Yeah, right. Okay. Yeah, makes sense. So crowdfunding is more of like a subset or a type of syndication, if you will.
Exactly.
Yeah, okay. And so there's some differences between what you're allowed to do and what you're not allowed to do in terms of syndication versus crowdfunding, right? Because with crowdfunding, you can advertise and you can raise money from people you don't necessarily have a relationship with, right?
Exactly. So at the end of the day, all of this depends on whatever SEC rule that you are raising money under, right? And so there's a number of different rules, and the difference between all of those rules basically boils down to how much can you raise? Who can you take money from, right? And the difference there really is between accredited investors or rich people and non-accredited investors. And the last one is how you're allowed to advertise the deal. So there's a concept called general solicitation. You can advertise everywhere. You can talk about it on LinkedIn. And then the other method is really sticking to your pre-existing network. So really family and friends, people that you already know.
Okay, so it kind of comes down to three different things: how much you are trying to raise, who you're raising it from, and how you're contacting those people.
Exactly. And what I usually like to say is the more freedom that the SEC rules give you in terms of doing any of those fundraising activities, the more they're basically going to ask in return, right? So they might ask for more disclosure. They might ask you to go through a particular process or list on a portal. And so, that's the general gist of it.
Yeah, okay. And this is where you've kind of come in and tried to make that whole process easier for investors and make it a little more automated and a little more boutique. Like you mentioned, you're trying to make it a little more accessible to your everyday real estate investor.
Exactly.
Yeah. So, Amy, what are some of the ways you're being able to do that? And how are you being able to help real estate investors?
Yeah, sure. So I think the crowdfunding rules really provide a lot more flexibility nowadays for people to go out and raise capital and for people to be able to invest in different deals, right? One of the reasons why I got into this business, why I thought it was so intriguing, was because in some ways it's kind of like the democratization of investment opportunity, deals that people like me normally wouldn't get to see suddenly go on the internet, and now anyone can invest, right? So long as you fit certain parameters. I think if I really had to give any tips or tricks of the road, at the end of the day, it all comes down to how you're using the different rules and regulations in your overarching strategy, and then how you're marketing. That's pretty much what raising and investing capital boils down to.
Yeah, right. So are there any kind of pros or cons with crowdfunding over syndication, Amy?
Well, the one big pro is that you now are able to go out and advertise and, really reach a much broader audience than you would have otherwise been able to, right? So you can do Google ads and Facebook ads. You can post about your deal on LinkedIn. You can go to your local RIA and grab the mic and tell everybody about your deal. And that's not really something that people have ever really been able to do before until recently. The only thing they have to remember, though, is that to the extent that they're doing that, they have to, again, follow certain rules. So, for example, the example I'm giving about general solicitation, a lot of people who are doing crowdfunding right now for real estate are using a particular rule called 506C. And what 506C basically says is we're going to let you advertise, we're going to let you raise as much as you want, but you can take accredited investors only. And traditionally, accredited investors have been able to basically self-certify. They basically tell you they're accredited. Now what you have to do under 506C is you actually have to prove that you're accredited, because the SEC basically, they don't want you taking money from like grandma on her last social security check,
Right.
Something like that. So what they're really trying to do is balance investor protection with allowing people to invest and raise capital.
Yeah, so if you're going to go out and advertise to essentially strangers, they have to be accredited. And can you give us the definition of accredited just to refresh our memories for those?
Sure. So an accredited investor is basically someone who, for the past 2 calendar years, has earned $200,000 or more if they file their taxes singly, or $300,000 or more if they file their taxes jointly, or they have a net worth of over $1 million, excluding their primary area of residence. So basically, you got to take out the house that you live in.
So essentially, the SEC loosens up restrictions on those types of people since they realize that they're a little more sophisticated of an investor.
Well, the funny thing is sometimes they are sophisticated, sometimes they aren't. At the end of the day, the SEC was more comfortable with accredited investors investing in certain deals because their thought process is, hey, if you lose money, it's okay because you've got money to lose and you're not going to be homeless and on the street. Whereas with non-accredited investors, there are certain regulations where you can take money from non-accredited investors, or non-accredited investors can invest, but they do have to be sophisticated. That rule is 506B as in boy, which is the traditional method of syndication. And then there's a couple of other new rules. So regulation crowdfunding, regulation A+ deals, where you actually don't even have to be sophisticated, but you can only invest up to 10% of your annual income.
Okay, so there are SEC rules out there that allow one to not be an accredited investor, but only invest up to 10% of their income.
Exactly. Yeah.
Okay, so there are opportunities. If you had a deal that you were trying to pitch or crowdfund, you could go to both accredited and non-accredited investors.
Yes, it's just that today, if we are looking at the real estate market specifically, right, the place where non-accredited investors are going to have the most opportunity are going to be 506B deals, which are not advertised, but you do have to be sophisticated. So the sponsor will likely ask you a couple questions about, hey, have you invested in real estate before? And you will say, yes, I'm a real estate broker, or hey, I have an MBA license, or hey, I studied finance in undergrad, or something like that, right? And then the other types of crowdfunding, Regulation A+ and Reg CF, they're still taking off today. There still aren't quite as many of them. I would say there's more Regulation A+ deals than Reg CF deals. There's actually a good number of Regulation A+ funds out right now. So, for example, Fundrise has eREIT, Realty Mogul has their Mogul REIT. I think AHP has one as well. So there's definitely opportunities there. And, of course, people can lie about their income online, but hopefully they don't.
Yeah. So, Amy, backing up here, can you dive into a little bit about the Reg A and the Reg CF and explain what those are?
Sure. So Reg A and Reg CF are probably the best way to describe them is that they're opposites of each other, right? So Regulation A+ is a type of regulation for a more sophisticated type of sponsor. Reason why is because you have to go through an SEC process that's about 4 to 6 months long, but you get to raise up to $50 million for basically each fund that you're putting together, right? And so it's a much larger investment opportunity. So for example, the Fundrise eREIT out there, they're out investing in multiple deals through their various Reg A+ funds, and people, I think, can invest for like $1,000 is their minimum, I think. The opposite of that is regulation crowdfunding. So under regulation crowdfunding, a sponsor can only raise up to $1 million and change every 12 months. So very different from 50 million, right?
Right.
They can still go to the crowd, but now they have to be listed on a FINRA registered portal. So there's a couple out there. One of the most popular ones, or one of the only real estate Reg CF portals out there nowadays, is Small Change. And there isn't quite as much deal flow yet today. And the reason is because most real estate sponsors who are more experienced, $1 million every 12 months is not going to suit their capital needs. And so they usually end up turning to another regulation that is going to be able to sustain them for more than one deal a year. Regulation crowdfunding, I think, tends to be more so very small one-off deals, sometimes more so from beginners than experienced syndicators.
Yeah, okay. Beginning to understand some of those Regulation A+, CF, those are all kind of new, especially to our audience members, I'm sure. A lot of our audience members, Amy, are interested in syndicating real estate deals, maybe already have. So can we talk a little bit about if they're looking at crowdfunding, what are their opportunities and how does one go about starting a crowdfunding fund, essentially?
Sure. So there's plenty of opportunities. You can, depending on what you're doing, you can actually pretty much crowdfund whatever you want. Now, today, if someone wanted to go do a real estate crowdfunding campaign, there's a number of different avenues they can take. First of all, there are the venture-backed large real estate crowdfunding platforms. These are all ones that came out between 2012 to maybe 2015. And they tend to be websites where usually they have a broker-dealer license, which means that if you list your deal on their website, they will actually help you go and raise that money. Now, the second type is the listing portal. So think of it as like Craigslist for real estate crowdfunding deals, right? And so those types of platforms are like CrowdStreet, Real Crowd, where you pay a listing fee. You can post your campaign on their portal, but they will not necessarily actively help you sell or fill your deal. It's merely a place to post it, although it might go out on their email listserv. And the third thing, which is actually becoming a lot more popular, is people who are creating their own real estate crowdfunding platforms. So that's where you're seeing Joe Schmo's real estate company. They have their real estate website and they're adding a button that says browse investments. And so people click on the tab and it goes to their own personal portal, which has their own deals that they're trying to raise for themselves.
Yeah, okay. You are right. You're starting to see some of those real estate investors open up funds to the general public and kind of always wondered what they're doing. So that makes a lot of sense.
Yeah, I think that last option is becoming increasingly popular. I see more and more every single day.
Yeah. So, Amy, when one's looking at opening up a crowdfunding fund, what should they be looking for in their general counsel, their attorney?
Sure. So I would definitely go with someone who has experience specifically in real estate securities, because that's the type of law this attorney would want or need to practice. The best thing is if they specifically have real estate syndication malpractice insurance. That type of malpractice insurance is actually pretty expensive. From what I hear, it's the second most expensive malpractice insurance there is out there. But the reason you really want to have it is because it kind of indicates to you that this attorney specializes in this space. They're not just a generalist and they know what they're doing. But B, it kind of is more added benefit for all parties involved, because if your deal goes sideways and the investors can't quite find a sponsor, sometimes they'll go after the attorney. And it's really good to have your documents covered, right? If the investor says, hey, there's an error in the documents or something like that, then it's added protection.
Yeah, okay. So malpractice insurance is one. Obviously, you want an attorney with relevant experience. That obviously makes sense. Is there anything else?
From less of a substantive knowledge standpoint, but more of a ease of use and timing and efficiency one, what I've done now, because I used to be a real estate syndication attorney, is I've actually started my own legal technology company. And what we're aiming to do is to take all the inefficiencies out of the legal process, right? And so we're able to do real estate syndication documents faster, cheaper, and really at the same quality and caliber of attorneys, except part of our process is it's highly automated. So everything from integrating with Stripe so we can take credit card payments because no one wants to go to the bank and stand in line and send a wire, to digital engagement letters to the client. Right. To the client, fills out a form, they review it with an attorney, and a first draft gets automated and reviewed and tweaked by an attorney in the first 48 hours, which is significantly faster than working with an attorney.
Yeah, wow, that is. So, Amy, let's kind of drill down on some of the prices of things like this. What can one expect if they're raising funds for a syndication or a crowdfunding versus doing something with BootStrap?
Sure. So first of all, I'll say it depends on how much you're raising, right? Whether you're using BootStrap or a law firm, generally there is more risk for more money that you're raising. And just so you know, if your attorney does have malpractice insurance, they actually have to report every single deal to their insurance provider, which means that their premium goes up. So basically, whether you're raising $1 million, the price is going to be different from whether you're raising $100 million. So that's the first part. The second part is you really want to look at different providers regardless of how much you're raising. So for a $1 million deal, I would say that the spectrum in legal fees is probably going to be anywhere between $10,000 to $25,000, depending on what kind of law firm you're using. With BootStrap Legal, for a $1 million raise, it would be a flat fee of $7,500. So what that means is we don't do retainers where people bill by the hour, and then 3 months later you get an invoice and it's like twice of what the attorney quoted you. Right. We really want to provide predictability. And so our fees are all flat fees. They basically start at $7,500 and go up according to how much you're raising. Yeah. And then the only other thing that people should be considerate of is they do want to keep, or at least budget at least $1,000 to $2,000 for extra things, right? And so that's going to be entity formation. It's going to be the fees that you have to pay to the different state regulators after you raise, because you have to do compliance filings with them. And then to the extent you're crowdfunding, usually if you're crowdfunding as opposed to syndicating, it shouldn't cost that much more, although it does depend on which firm that you're working with. Sometimes there's some firms out there who have never done a 5/6C deal before, so they might have to learn on your dime. And, sometimes some attorneys will charge extra because they have to do some advertising compliance. But the real extra expense in a 506C really doesn't come from the legal side. It actually comes from the marketing side, right? Because no longer are you sending out an email blast to people that you already know and you have all their emails. Now you're trying to reach a wider network or audience. So whether that means it's marketing budget in terms of digital marketing or going out to the conferences or what whatever, you will want to put aside some sort of marketing budget to be able to really take advantage of a crowdfunding offering.
Yeah, and that's more of a fund that's not so much rolled into your legal fees, but just an added cost.
Right, exactly. And so basically what I kind of see my experienced syndicators from what I see that they're doing, a lot of them traditionally have raised capital the traditional way, which is a private offering with their pre-existing network. Now what they're starting to do is every once in a while, not all the time, but every once in a while, they'll put out a 506c deal out there, an accredited crowdfunding deal. And so what this basically allows them to do is they can still raise from their network of family and friends and business associates and all the list of incredible investors that they have networked with over the years. But they put out a 506c once in a while to be able to go out and reach a base of new investors. And if they get those new investors in on that deal and they build that pre-existing relationship with that investor, then basically next time around when they're doing their next 506b deal or their private raise, they can now draw on a larger list of people that they can go out to. So that's what we're kind of seeing today.
Yeah, okay, that makes a lot of sense. So, Amy, as one is raising money, do they have to raise funds for a particular property, or can they raise it for a general fund and then go out and select a property after the funds are raised?
So both. It kind of depends on what your business is and what your strategy is and who you're going out to get investment dollars from, right? So in terms of what you can do, like what's legal, you can do whatever you want. You can identify a property and have people specifically invest in that. That's what we call a single asset syndication. Or you can do what we call blind pool, right? You basically have a business plan and you say, hey, we want to do multifamily apartments nationwide. The big difference here is that what I always say is when an investor invests, they're investing in two things. One is they're investing in the project. And the second thing is they're investing in you, the sponsor, because they have to trust you. Now, when someone's investing in a single asset syndication, they have both you and the property to underwrite. So they tend to kind of know what they're getting into. When someone is investing in a blind pool, really what they're investing in is you and your reputation.
Yeah,
right? They're really investing in your ability to execute. And so your reputation becomes the defining factor. You really have to be able to build that trust with your investors. So people who have a very strong track record can do blind pools, or people who are just starting out but are only going to family and friends and not, people that they don't know that well can get it done. But if someone's trying to do a blind pool and they have no track record and they're going out to strangers, that usually doesn't work too well.
Yeah, I can see why. Well, Amy, what should our listeners know if they're interested in building their own real estate crowdfunding platform?
Sure. So my biggest piece of advice there is do not reinvent the wheel. The technology is so cheap nowadays, and the technology does not add a lot of value to your business. It simply enables certain aspects of your business, right? And so there's so many technology solutions out there today where they're pretty much plug and play. So it's like a Wix or a GoDaddy or Squarespace for real estate crowdfunding platforms. So there's everything from the Invest Now button from Fund America to white label platforms from the crowd engines and crowd streets of the world. And I think even small changes white labeling their platform today. So there's a lot of white label providers where it's very plug and play. I would say don't spend too much time or money in customizing how it looks, because I don't think you're going to get that ROI back.
Yeah, I'm sure this technology is really just pulling contact information, getting kind of the process started for the legal side of things. And I'm sure it's just kind of like you said, plug and play, like no need to reinvent the wheel, no need to go out and like make it all fancy. Just pull a plug in on your own website or whatever that may look like.
Yeah. And then there's other things that, quite frankly, if you're trying to build it yourself from scratch, it's going to cost you a lot of time and money, right? Figuring out how to do KYC compliance and figuring out how to integrate with bank accounts and making sure that you're being compliant with all the different financial regulations. The white label solutions have already all figured that out. And so it's, they have agreements with all the vendors who provide those compliant solutions. So you don't have to worry so much about figuring out how to verify you're a credit investor. They just have an API or some direct line to a vendor that will do that for you instead of you trying to figure out all that brain damage. You should really be concentrating on your real estate business.
Yeah, awesome. So, I mean, you got some questions about BootStrap Legal. It's such an automated process, and that's something that you guys are trying to do there. How does it still maintain any kind of personalization that's needed throughout the process? And how can an investor ensure that they're getting a kind of a boutique level of service?
Sure. So like I said, it's a hybrid model, right? We're not like LegalZoom where it's like, oh, these are a bunch of fill in the blank documents, right? Every single real estate syndication deal that I've ever worked on always has some sort of bespoke element. And so we do think that the human process is very important. So what happens is that people go in, they answer our adaptive questionnaire, and from there, a set of documents, the first draft gets automated. From there on, you work with an attorney to tweak it to the particular circumstances of your deal. But at least in doing the first draft, we estimate that attorneys might save anywhere from 10 to 20 hours of attorney time, which is, pretty valuable. And then right now we're actually working on tools that actually enable a better editing process. So, I can't tell you the number of times where I've been working on a deal and then we're done with the first draft or the second draft. And then the client comes back to me and they say, hey, we're getting a lot of traction on this deal. I would like to raise the maximum offering amount by $1 million. And they don't realize that, if you change the number, it changes like all the calculations, like all the unit numbers. It changes like maybe 30 different parts of the document. And so you have to manually go through and do that. We're trying to build editing tools that actually make that a lot easier and more precise and accurate for attorneys so that they don't miss things. Because I've definitely seen and even been on deals where things will change and it really throws the attorney through a loop in terms of having to spend the next 5 hours pluralizing the difference between property versus properties or making something from a 1-class LLC structure to a 2-class LLC structure like that. It's really annoying. It's not a good use of our time and clients shouldn't have to pay that much for it.
Yeah. Well, that's awesome, Amy. And sounds like you guys are providing a ton of value there at BootStrap Legal to investors. And it sounds like a great service. So I'm excited to share this with our audience. Amy, is there anything that you think a real estate investor should know getting started when they're looking at syndication or crowdfunding, just in a general holistic approach?
Yeah. So the one piece of advice I have for syndication is I call it ABN, always be networking. It doesn't matter if you don't have your deal yet, if you don't think you're going to get started for the next year. Every time someone finally is ready to get started, that's the point where it's too late to start networking, right? Because that's the point where you need to already have an established trust with your investors. So don't wait till it's too late. Always be networking, right?
Okay.
And then the other piece of advice I have for people who are doing crowdfunding is you must find a way to convey to an audience of strangers that you are a trustworthy person.
Yeah, it's like the ultimate interview.
Exactly.
Yeah, okay. So always be networking. And then if you're crowdfunding, you've got to be able to sell yourself and let those potential investors know that you're a credible source and are competent and capable of handling their investment.
Yes.
Yeah, awesome, Amy. Well, Amy, there's been so much great stuff today. Lots of technical stuff about SEC regulations, differences in crowdfunding and syndication. Where can our audience connect with you if they have any other questions?
Yeah, sure. So our website is really simple. It's just bootstraplegal.com. And if they want to talk, they can just go on there and book an appointment.
All right. Thanks, Amy. Well, we'll certainly put that information in the show notes. Amy, we want to thank you for coming on the show today and take care.
All right. Thanks so much for having me.
All right. Thank you, Amy. All right. That wraps up our episode today with Amy Wan. Amy is an expert in helping investors just like you legally and correctly raise money for syndications and crowdfunding. If you have any questions about anything we discussed today, feel free to reach out to me. You can contact me at www.jacobayers.com/contact or connect with me on Facebook at The Real Estate Way to Wealth and Freedom. Till next week, signing off, I'm your host, Jacob Ayers.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC exclusively.